Hey guys, hope you guys are doing well out there. It is Tuesday, December 1st, 2009. Dow just closed and stock markets just closed here in the United States. I wanted to kind of bring you guys a brief market update, market news updates. There's a couple of news articles that kind of caught my eye in Bloomberg specifically, and I'll certainly post those links here in just a few moments. You can read along with me if you like. Stocks rise worldwide as Dubai concerns wanes. Well, like I mentioned in my previous video, and I certainly got some mixed emotions about my video about Dubai. I mentioned that it was priced in, ladies and gentlemen, and this is what I meant. This wasn't what I meant was this wasn't going to be another Bear Stearns. It wasn't going to be another Lehman Brothers, where you're going to have a total collapse and shock waves are going to go through the entire financial system. This was priced in. Everybody kind of expected Dubai to have some issues, with oil as cheap as it has been, quote unquote cheap. Anything under about $90 a barrel is cheap because Dubai pretty much lived high on the hog when it was $150 a barrel. So it's kind of like being human. You go from making $75,000 a year up to $150,000 a year, and you get used to making that kind of money, and your income drops again. Well, you're kind of SOL, as they say. So stocks rose on that news. Manufacturing expansion in the U.S. China helps spur a global economic revival. So let's click on that and look in that and see why we're being lied to here. What they basically are saying in this news article is because of the $2 trillion of stimulus that has been injected into worldwide markets since September of last year, 2008. That's what they're crediting this with. So, what's going to happen when the stimulus runs out? What's going to happen when they stop doing this? Real demand, like you and I, people who are out there, the actual consumers, we're not buying anything. I don't know about you, but I don't buy anything I don't need. I think a lot of people are kind of in that situation right now. So, I really think after the first of the year, you're going to see what real demand looks like. And it's not going to be pretty, guys. And absent another financial package, stimulus package, I think you're going to see what the stimulus looks like. So I would recommend people out there, instead of buying useless pieces of plastic for Christmas or whatever holiday you celebrate this season, buy storable foods. Think about ways of defending yourselves and purchasing certain types of equipment in order for you to do so. Think about gold and silver, but the first two things I concentrate on, of course, are food and means of defending yourselves. Another news too. Obama's sending 30,000 more troops to Afghanistan. He's our Peace Prize president, right? and this just boggles my mind, ladies and gentlemen. And I can't believe it's actually spilled into the financial news. But on Bloomberg.com, front page news, Tiger Woods will be cited for careless driving. I could care less about Tiger Woods. I'm glad he's had a success. I think it's amazing what he's done. He's a terrific golf player. But you know what? I don't know how a multi-millionaire golfer has anything to do with my financial situation or our financial situation. And why this is on front page of Bloomberg.com is beyond me. And you know what, ladies and gentlemen, that just goes to show you again how the media just tries to anesthetize people. Hey, just look at the Tiger Woods, oh, Tiger Woods, and even in Bloomberg.com, and that is pathetic. So, anyway, guys, the line continues. We're in a global economic revival. The Dubai risk credit, it declines. I really think that was almost kind of a media saying, kind of sensationalize it, and now they realize it's not that much of a story, so they're kind of backing off of it. Dow today, definitely trying to reach 10,500 mark. Again, like I say in almost every single video, the Dow has lots of liquidity in it, thanks to us taxpayers, and the dollar continues to fall. It's currently about 74.4 roughly on the USDX. I definitely expect it to test 71. There was 71 level probably next couple of months, and you may see it actually bounce off that, a little bit of rally off that. But I really expect it to, fall through that fairly easily, because you can't just print a bunch of money. Nothing has fundamentally changed in our economy, ladies and gentlemen, and people have got to understand this. You can't just pump money into something and expect it just to kind of start to take a life of its own without changing anything. I mean, if it's broken in the first place, and all you do is throw money at it, yeah, you'll see a temporary relief. But if you don't change what's broken, it's not going to continue. I mean, it's not going to fix the situation. So as soon as you remove the money, you get to see what's broken still, right? So that's the problem, guys. I think after the first of the year, when the anesthesia starts to wear off, I think you're going to see a lot of issues come to light. Like I said, this holiday season, prepare as best you can. I really feel like, when the anesthesia starts to wear off, we're going to see some interesting things, especially in the first quarter of next year. So anyway, guys, I hope you guys enjoyed the video. Please rate and comment if you would. And other than that, we'll be talking to you guys soon, and I hope you guys have a good rest of the day, okay? Bye-bye for now.